future millionaires and billionaires, and welcome new subscribers. Guys, today I have some very shocking news to give you and some very important information, and I do suggest you guys watch this entire video because it will literally save your life because of what's happening around you and in the world. So how is this tied to crypto, guys? Well, I'm going to show you why it's important to look at the bigger picture and to keep stocking and loading on your crypto positions every minute you get, because I'm going to show you. In for those of you who are new to the channel, don't forget to join VisionaryDeFi Telegram so you are part of this wealth transfer that is taking place. And what I'm going to share with you guys is some very shocking information. Like I told you before, guys, I am able to read body language and I am able to communicate with the subconscious mind to find out more about a person than they know about themselves. So what we're going to look at is we are going to look at a Fed meeting, Federal Reserve meeting that took place I guess yesterday. And I'm going to show you, well, they're going to tell you things, but then I'm going to look at the body language and what they are saying, and then tell you what they are trying to hide, or if they are trying to hide something. So guys, I made previous videos on my personal YouTube channel, which is AwakenTraveler. If you have the opportunity, I recommend watching these two videos. This one that said future predictions that came true and more to come, and the other one is what to expect in the future. So in those video, guys, I predicted hyperinflation, inflation, the economy collapsing. I've been making videos since 2016 regarding economic collapse, downtimes, and hyperinflation. So we're gonna go over this video. I know it's a little bit long, but imagine if you have the opportunity to view a video, even if it takes an entire day. If that video can save your life, literally can save your life, then it is worth watching. So I'm gonna play the video, guys, and we're gonna go over on what is being said and what to look out for. And I'm gonna tell you what they are trying to hide.
Good afternoon and welcome everyone to the IMF's debate on the global economy. I'm Sarah Eisen. I'm the host of Closing Bell on CNBC, and I am thrilled to be here in person at the IMF in Washington with a distinguished group of leaders to talk about all of the...
Okay, guys, I have to say, they've chosen someone who is innocent, who doesn't really know what is happening or what's going on. As a reporter, you know, they are always going to choose the person that doesn't know about what they know. So once they direct questions to them, because for example, if you are trying to hide something, would you want an interviewer that knows what you're trying to hide? Because sometimes they can slip up and ask you questions they are not supposed to ask you. And based on her body language and the way she represents herself, I can tell she has nothing to do with what is going on. She have no clue is what is happening. So she is just there as an interviewer to ask questions. So they are careful as choosing who to choose as an interviewer.
Issues facing the global economy. Joining me is Christine Lagarde. She is the ECB President, Managing Director of the IMF, Kristalina Georgieva, the Chair of the Federal Reserve, Jay Powell.
Okay, guys, what we're gonna look here is we're gonna look at each person's body language to get an idea of who they are and what, I mean, the body can tell you so much about a person. So we'll go from the right. The lady on the right wearing the dark clothing, the lady that's facing the interviewer in the red here. I'm not sure if you guys can, the one, let's say, how can I say this? Okay, the lady that is wearing the dark sweater, not the one with the white hair, the dark haired woman that is wearing the dark sweater. Her body language is very open. So she's a very honest person. She might have no idea what's going on. She might just be there to take notes. So most likely she won't be speaking much. And the next to her we have Powell. Look at Powell's body language. It is very closed. That means when you have a closed body language, that means you are either hiding something or you are not open to telling people the truth. The same thing for the lady on the right with the white coat on. She's also has a closed body language. And the lady with the white hair is different. Notice that she doesn't really have a closed body language, but her body is tilted away from the others, so she is facing more of the interviewer. That also shows you that she doesn't want to be part of what is going on with the lady in the white the white coat, Powell, and she wants to tilt her body away. Not only that, look at her hands. Her hands is fiddling with a writing utensil. That means she is slightly nervous, and not only that, she is a little bit pretentious. So we'll continue the video. And from Indonesia, the Minister of Finance, Sri Mulyani Indrawati. And then joining us remotely, we've got the Prime Minister of Barbados, Mia Mottley, who couldn't be here today, and she is in sunny Barbados. We're all jealous, and we're happy to have everyone here, the most powerful women in the economy, and Chair Powell. And I'm bringing this video to you guys mainly because this video actually confirms, like I said, they're not going to tell you the truth. I look at their body language, and based on their body language, I was able to confirm exactly what I predicted in videos years ago, which is hyperinflation. And I'm gonna add it to it as we go along, because I have some very hard truth to share with you guys, shocking information. So stay tuned.
Welcome. So we came here today and we thought we were going to be discussing this year the recovery from a brutal 2 years of COVID. And instead, we've got the Russian invasion in Ukraine. We have that influencing prices and inflation. We have a dramatic shift in policy, and we have some aggressive lockdowns in China. And all of that is distorting and depressing the global economic outlook. So maybe, Madam MD, if you could just kick it off and set the stage for us, because you did cut your outlook for the global economy this year, and it sounds like you're
Okay, guys, you can quickly rewind the video a few seconds back. Notice how Powell is quickly shifting his body from open and closed. He doesn't know. He's not sure of himself. He doesn't. He's tilting and shifting his body. He's very nervous. That means he's holding something. He's holding something he doesn't want to let out.
You're going to be cutting it more. So how much of a slowdown are we facing?
It is quite significant. Last year,
And notice how before she spoke, she went from an open body language to a closed body language. That means she's hiding something. She doesn't want something to come out. And so that way her body took the stance of closure, which is the closing the palm and closing the body. So she's forming a barricade around herself. It's a subconscious thing. So whatever she's say after she closes her body, that mean take it with a grain of salt because it's not gonna be the truth.
we were doing quite well, 6.1%.
And notice how she blinks her eyes very rapidly. That means that's an indication of a lie. When a person is lying to you, they are going to blink. The eyes are going to blink rapidly. That means they are trying to get the lies out, but at the same time, it's like a camera lens. When a camera is taking pictures, it's letting in and out exposures, light. So I mean, let's not go too deep into this, but because of her eyes blinking rapidly, that means she's telling a lie.
Growth, we were projecting slightly less, but still high for this year, nearly 5%. And then we got Omicron, first revision downwards, and the war in Ukraine, second more significant revision downwards. Would there be more? It is to be seen. It depends on how long the war is going to last, how effective policymakers are going to be to deal with inflation without slowing down growth, and is there something else to hit us? We do live in a more shock-prone.
And most of the times, they're gonna give you hint as to what is happening. So the fact that she said, "Is there something else is going to hit us?" That's a clear indication. Yes, that's something that is that is a bigger news that's gonna come out. So eventually, they're not going to hide things too long because the truth will eventually come out.
World. If anything we learned in these 2 years is that we have to be more agile to build more resilience to these shocks. And one of the objectives of us meeting here in Washington is to talk with each other and identify what is the policy combination that can deal with these short-term challenges without jeopardizing longer-term sustainable growth.
Well, we do have a good mix of fiscal and monetary leaders here on the panel. So just to follow up quickly, Madam MD, as far as the outlook and the deterioration, how close are we to something like a global recession?
Well, we are still very much in positive territory. Growth projection for this year, as you said, 3.6%. Let's remember that was the average growth rate between 2011 and 2019. We have only small handful of countries that are in negative territory. Among them, Ukraine, devastated, shrinking by 40%. Russia, very significantly, in fact, impacted, 11% below what we projected in October. But most of the countries are growing, although slowly. What is the big problem, Sarah? The big problem is that the exit from the pandemic-induced crisis is now slow.
And guys, the key player here is Mr. Powell. So notice how he's fiddling with his hand, his fingers. That means And notice his slouch body language. His mind is literally somewhere else. His body is just there. So that gives you an indication he knows something big that is coming. He's not going to tell you that.
Going down for the future. Just one number. Emerging markets and developing economies.
Look at his body language. He's not paying attention to anything. His mind is somewhere else. This is the same way, let's say, for example, if you are in a group of a crowd, or let's put yourself in his position. Let's say if you are in a meeting and you are discussing a subject and you know something very bad is coming. Your mind is gonna be on that topic. Your body's gonna be there, but your mind is gonna be elsewhere thinking about it. And at the same times, if it's something bad that you're thinking about that is coming, then your body's gonna be slouched and you are going to be nervous. And not only that is you're going to lose focus on what's around you. So this is the same thing that's going on with Mr. Powell. So his body language tells it all. It confirms everything I've stated before in years prior, and everything I know now.
Will be still 6% below their pre-pandemic trend in 2026. This is 2 years or more delay in their recovery. What is my biggest worry? With food prices, energy prices up, with prospects for recovery much worse.
Guys, I do recommend stocking up on food because within the next year or so, food production is going to be cut off by 50%. So you might just wake up and then go to the supermarket. Food prices is 50% higher across the board. And it's going to be very difficult for a lot of people to feed themselves in the coming years. So there's going to be a huge global famine. And it's going to start with the US.
Are we going to see the phenomenon from 2019, people on the street, unrest, creating more difficult environment for policymakers to do the right thing?
Yeah, we're going to get into some of those risks, but I do want to hear the individual outlooks, especially from Europe, President Lagarde, because of its proximity to Russia and Ukraine, the spillover effects that you're seeing, and now there are concerns about stagflation there and the effects where it depresses economic growth and drives up prices. So how much has the outlook for Europe changed?
It has changed exactly in the same direction as indicated by Kristalina. So it's been a haircut to growth.
Notice how, like I said, she's fiddling with the pen again, guys. So that's a clear indication she's trying to keep her mind on something else. The body is looking for comfort. So she is fiddling with the pen. She's nervous and she doesn't want the truth to come out.
Growth projections, and it's been a rise in the inflation numbers. And certainly when we look at the risks, they're skewed to the downside for growth. So there might be more cuts to come, and to the upside for inflation. That's where we are. And it's particularly saddening, not only because of the death, not because of the destruction, not because of the devastation, which in and of itself is a cause for huge concern and sympathy and support for the people of Ukraine, and blame for those who took the initiative of that unjustifiable invasion, Russia. But it's also causing harm throughout the world, predominantly in Europe for the moment, but it will, there will be ripple effects going way beyond Europe. For the moment, as you said, geography plays a role, and Europe is literally next door. Ukraine is one of us, and taking this horrible hit. We are seeing refugees out of Ukraine into many of our European shores and countries, and we have to, by solidarity, do everything we can to support them. That's the situation that we have at the moment in Europe. It is particularly saddening as well to see that the recovery that we were embarking on is being stalled to a certain degree by what is happening out there.
What if Europe takes another step and does ban Russian oil, gas, and coal? What would happen to the European economy?
Well, let me just first of all salute the sanctions that were decided on a pretty global basis. Sanctions against the oligarchs, sanctions against the family members and the people at the origin of this unjustifiable war. De-swifting of about 80% of the banking sector of Ukraine, of Russia, and also freeze of the assets of the National Central Bank of Russia.
Guys, I just can't keep my eyes off of Powell because his body language tells it all. So we'll continue until he speaks. Then you will kind of get an idea of what I'm referring to here.
Russia that could be identified outside of Russia and a couple of other countries. So this bulk of, there were 5 set of sanctions decided one after the other, has clearly had a massive impact on Russia, and will continue to have an impact. And I think we will. The more it's rolled out, the more impact it will have. Obviously, the next question that everybody is agitating and considering is what happens with the oil on the one hand, the gas on the other hand. I think the issue of coal has been addressed by the Europeans together, who've decided to ban coal coming out of Russia. And I think it's a process, and I would not exclude that there be more decisions to come as it unfolds.
Chair Powell, the U.S. has been a relative bright spot in the global economy, but now policies are changing, as you know, to address inflation, and there are concerns globally about the tightening of monetary policy. What's the U.S. outlook, and how are you feeling right now about your claim that we're not heading toward recession?
I guess I'd start by saying that we are unified with our allies around the world in opposition to the invasion of Ukraine for no reason and the human suffering that's going on there. And while these economic matters are important, there are very fundamental things at stake there that we want to keep in mind. So in terms of the U.S. economy, we are a bit more remote from the immediate effects of the war compared to Europe, for example. But we will be feeling them over time, and they will come in the form of upward pressure on inflation, further upward pressure, and a bit of downward pressure on output. But the U.S. economy is very strong, performing very well. By most forecasts, we'll have another strong growth year this year. The labor market is extraordinarily tight, extremely tight.
I will have to disagree with everything he just said, guys. Notice that he has a very close body language. So he is holding in information. So guys, we are heading for the greatest depression you have ever witnessed in history. So that is going to dwarf the 1929 Great Depression. So this is your opportunity. If you are listening to the video, go ahead and stock up on foods, on perishable goods, because what is coming is going to eliminate a lot of people.
Historically so, and to the point where really there's an imbalance between supply and demand for workers. And of course, the big issue that we're very focused on is inflation, and getting inflation back down to our 2% goal.
But if we start to slow materially in our economy, will you stop tightening even if inflation is still above your target?
Well, so first of all, you asked about a soft landing. Basically that's our goal. Our goal is to get demand, use our tools to get demand and supply back in sync, so that inflation moves down, and do so without a slowdown that amounts to a recession. That's our goal. And I don't think you'll hear anyone at the Fed say that that's going to be straightforward or easy. It's going to be very challenging. We're going to do our very best to accomplish that. And it's absolutely essential to restore price stability, Without price stability, really the economies don't work without price stability. We need that to have a strong labor market for an extended period of time. We need it for financial stability, so we must do that.
The market has 3 50 basis point hikes coming at the next 3 meetings as of this morning. Is that reasonable?
So I try not to comment on specific market pricing for things, but I will just say this. At our last meeting, and this was in the minutes from the meeting, many on the committee thought it would be appropriate for there to be 1 or more 50 basis point hikes.
Are you one of those people?
I don't disclose my own path. I try to lead the committee, but so I think markets are processing what we're saying. They're reacting appropriately generally, but I wouldn't want to bless any particular market pricing. The thing I want to say though is we really are committed to using our tools to get 2% inflation back. And I think if you look at, for example, if you look at the last tightening cycle, which was a 2-year string of 25 basis point.
Guys, if I'm pretty sure you are aware of this. If every time you go into the supermarket and you see prices of goods skyrocketing, that's an indication of the US dollar is declining, and that means it's time to load up more on crypto, because the crypto is against the US dollar. So whenever the dollar collapsing, that means crypto is rising, because crypto is a good hedge against inflation. So every time you go into the supermarket, you see things are getting more expensive, and then that's an indication that crypto is about to skyrocket. So load up more on your positions.
Hikes from 2004 to 2006. Inflation was a little over 3%. So inflation is much higher now, and our policy rate is still more accommodative than it was then. So it is appropriate, in my view, to be moving a little more quickly. And I also think there's something in the idea of front-end loading whatever accommodation one thinks is appropriate. So that does point, that points in the direction of 50 basis points being on the table. Certainly, we make these decisions at the meeting, and we'll make them meeting by meeting, but I would say that 50 basis points will be on.
I made a video yesterday about this was going to be a catalyst for crypto, and the fact that he mentioned that there's going to be an increase of 50 basis points, and they are going to increase interest rates, guys. So if people were smart, they would have started buying Bitcoin and crypto at that time. But during that time, the people that controlled the crypto market were dumping it and causing fear and panic. So whenever you see that's happening, guys, it's the best time to load up more on your positions. Don't let them scare you out of your positions.
On the table for the May meeting.
Minister Miliani, are you more worried about what Fed Chair Powell is doing, or about what we're seeing in China right now with these aggressive lockdowns because of COVID as it relates to your economy and the region and emerging markets?
Well, United States and China, the 2 biggest economies in the world. Whatever happened in these 2 economies definitely have a spillover to the rest of the world.
Okay, guys, notice how she is also playing with her hands and fiddling with her hands. So she's trying to keep her mind off the subject, but at the same time scrambling around in her mind as to what to say to not to let the truth out.
First, I think what Chairman Powell mentioned about the challenge to stabilize the price inflation down definitely will require monetary tightening, and that has been communicated. We are talking about well-calibrated, well-communicated,
She has a very way of comforting herself, which is fiddling and playing with her hands. That means she knows something that is troubling, so she is trying to comfort herself. That is the subconscious mind communicating, I guess, communicating with you to let you know what's happening in the mind, within the mind.
plan. So even though we cannot avoid that direction of policy, at least market as well as many policymakers in the emerging country and developing country need to prepare for this eventuality. I think that's one very important thing. In Indonesia case, back in taper tantrum in 2013, our situation today is much, much stronger. Back then, our external balance, the balance of payment in a current account deficit, and that's why even when Federal Reserve has not yet moved announcing it, it's already creating a huge jittery. Today, Indonesia, again, because of the war, unfortunately, but then creating this high commodity price, Indonesia has quite a significant commodity which is enjoying this high price. It is not appropriate, morally wrong if I'm saying that we are having the benefit of this situation, but
I want you guys to rewind this video just a few seconds and pay attention to the lady with the white hair, I guess the European lady. Notice how she can't seems to find a way to contain herself. She doesn't know, the body doesn't know how to display itself. So it's taking different stands. So it's closing the hand, removing the hand, playing with the pencil. That is a troubled mind. That is a sign of a troubled mind that's trying to keep itself contained in trying to hold itself together. So she is hiding a lot of information.
Our export grew by more than 24% last year, and in this first 3 months it's actually growing even higher than that. So we are enjoying surplus on trade account as well as on my budget. So we are in a position of strong position in which then this kind of situation, hopefully we are going to be much less affected. Although capital outflow is happening already on a bond.
Okay, I'm assuming she's from China, and notice that she said hopefully that we will be stronger. That's her referring to her country. Remember, I made previous videos back, guys. Whenever you hear someone say I hope, that means they are very uncertain about anything that they say afterward. If they say I hope, it should, that means be very wary because they have no confidence in whatever they are saying.
Bondholder in Indonesia, and in this case we've already reduced the exposure of the foreign ownership on our bonds to less than 18%. This is significantly reduced than originally 40%. So create stability. China situation with the COVID and the policy of.
Okay guys, I want you to rewind this a few seconds and look at Powell's feet. Look how he's fiddling around, playing with his feet. He's very uncomfortable, and look at his slouch body language. It's like a sad child thinking about whenever he gets home, there's a belt waiting with his parents, and he's about to get an ass whooping. So this is kind of the body language I'm getting from him. He is waiting. He knows something horrible is on the horizon. So you can see that displays in his body language.
Lockdown definitely create a lot of concern regarding their their growth outlook. Although in this past 2 days we heard from central bank Governor Yigang that they are going to do all necessary to make the growth at least still continue strong enough at the level. That definitely also create a little bit comfort, but the implication is going to be very deep. I mean, in Indonesia, we implemented this lockdown when we have Delta variant, only 2 weeks, and it really erased the growth on the first quarter last year to almost to the negative territory. So I can imagine that if you prolong this kind of lockdown, it will definitely have a huge, especially for a city as big.
I just can't say enough how pretentious the lady in the white hair is, guys. She's pretending to write down notes. That is her trying to keep the mind occupied and away from what is being presented at the moment.
Big as Shanghai in this case. So within that concern, we are not.
And also pay attention to the lady in the white coat. She's also fiddling with her pen. She doesn't know where to keep her arm, on the desk or on her lap. So in a closed formation, and her body is also closed. So she's also holding in information and also nervous at the same time.
Comparing which one is actually having a bigger impact, but these two very important countries will definitely have a huge impact for many developing and emerging countries. And this is on top of still very difficult recovery for many countries in the world from this pandemic. Although Indonesia output is already surpassing the pre-pandemic level, so we've already 106% above the pre-COVID level. But Indonesia is a few cases. Many is actually struggle, as Kristalina mentioned, they are still under the pre-pandemic level.
Do you have a sense of how much the China lockdowns, especially Shanghai and Shenzhen that we saw, are holding back supply chain even more at this point?
Well, that's definitely, I mean, they are among the biggest port, which...
erosion. So at a time when we need to have expenditure more than ever, there is little concessionary funding available, there's little fiscal space available, and there's an urgent need for us to seriously reform the international financial institutions if we are to be equal to the majority of poor people who don't live, by the way, in poor countries. 75% of the poor people of the world live in income.
And notice the difference between this lady, guys. This lady has a very relaxed body language, and she's very open, and she gives direct eye contact. So this lady, I'm not sure if she's aware of what's going on in other countries, but she is more honest than the other guys.
Countries that are denied access to concessionary funding and that do not have the fiscal space even when they get funded, and that have been compounded by events outside of control in the pandemic and indeed, of course, with the climate crisis.
That sounds like a to-do list for the IMF.
So much so. Mia, I have a piece of really good news for you. You have been championing the allocation of concessional finance, not only on income per capita, but also on vulnerability to climate shocks. And today, at the discussions we had, the Resilience and Sustainability Trust, which will provide long-term maturity, finally financing to vulnerable mid.
Notice how she was trying hard to get the word out, guys. That happens when you are lying. That means try to speak a word out. You can do this exercise yourself. Try to speak something that's a lie. Try to say something that's a lie, that's not true. It's going to be very difficult to say it. So it's going to come out. It's going to be very difficult to come out.
Middle countries got a big boost. We signed up already $40 billion for it. So one instrument that you should take pride of, when Christine was the managing director of the IMF, I remember you saying to us, there has to be allocation of concessional finance linked to vulnerability. It has happened. But let me take two more points of Mia's list, if I may. The first one is the issue of debt. In 2020, debt levels have jumped for an understandable reason, to put a floor under the economy. Largest increase since the Second World War in 1 year. In 21, it was easy because Interest rates were low, access to financing abundant. For some, it was cheaper to pay for more debt in 21 because of this drop in interest rates. 22, different. In 22, we have to brace for quite a number of low-income countries, some middle-income countries, to hit the wall. And we have to be honest, that requires upfront action by the countries themselves. Do all you can, extend maturities. If you have currency mismatches, fix it, but also for us, and the IMF has its own responsibility. We have to help countries restructure that early. And if we don't, down the road this year, we may be in a very difficult place. You talked about the 50 basic points. Just imagine what it means for emerging economies if, on top of it, their currency depreciates, which is also possible, and capital.
Like I said, she's giving you another sign here, guys. She said if the currency of other countries depreciate, which is possible, that is, she's telling you it's going to happen. So you already started to see it, hyperinflation. That's a sign that the global currencies all over the world is beginning to collapse. So everyone will run into crypto, because that's going to be the safest bet against hyperinflation.
So starts seeking the comfort of coming here to the United States. Very important problem. And the other one I want to touch very briefly on is climate change. It is not going away. On the contrary, it is getting worse. For shock-prone countries, this requires for them to take measures to make their economies less vulnerable to this shock.
Climate change has nothing to do with economy, guys. That's just them saying, giving you an excuse as to why the economy is failing. The only reason why it's failing is because they've been printing too much money. So they have to give you an excuse as it's global, it's climate change, but climate change has nothing to do with whether the economy is successful or not.
For the rest of the world to provide them with the support that is necessary. Sri Mulyani co-chairs the group of finance ministers that are wrestling with this issue. We have to come up with practical, very effective schemes, because if we don't, it would be...
Pay attention to Powell's body language. He is very slouched, like a sad child, knowing something very bad is awaiting him at home. This is the same thing, guys. He knows something very shocking is coming, which is the famine, global depression, global fiat currency failing. Then the entire financial system is going to collapse. They know this because they are in the business to know this. So this is what his body language is telling me, is confirming to me everything I've researched and found out is true. So like I said, pay attention to how his body language is. He's like a slouch, a sad child.
For these countries, for these vulnerable countries, it would be a shock they cannot anymore sustain on their own.
Since we're on the policy discussion, I do want to dive a little bit into monetary policy, since we have the world's two leading central bankers at this table. And maybe I'll ask you, MD, who has a tougher job right now? This guy or President Lagarde?
Whoa. Well, they both are fully equipped to do their jobs, and as a result, it is easy for both of them.
Yeah.
I think we can agree with that.
But President Lagarde, Europe is dealing with sky-high inflation rates as well, highest we've seen in the Eurozone. Why are you not sounding as hawkish as Chair Powell when it comes to raising interest rates and tackling inflation?
Well, first of all, I'm not a hawk, I'm not a dove, and I'm carrying this little...
Guys, I'm gonna give you a perspective on how hyperinflation is gonna get. So, for example, if you go into, for example, the United States is where it all going to explode. So let's say right now you have a loaf of bread that costs you, for example, let's look at the price of gas. So which a lot of people can't deny it's happening. So every day you wake up, you go, well, not every day, but every time you go to the pump, you pump your gas, you see the price rising with gas. So I'm pretty sure right now gas is close to $7 in the US. Eventually you're gonna see $20 prices per gallon, $50 price per gallon, then upward, and it's gonna continue to skyrocket. So this is what Powell knows. This is why his body language, his body posture is the way it is, because he knows what is coming.
Al with me all the time to remind myself that everything that we eventually decide has to be a concerted, coordinated, collective decision.
But they're gonna keep lying to you until the very bitter end, guys. Until it's too late to take measures and to protect yourself and to lost my train of thoughts here. I got distracted. So we'll continue.
I think you ask a really important question, and I thank you for that, because it's often the case that commentators, analysts will just put the two of us in the same bag, and I'm very proud to be associated with Jay Powell because I respect him greatly. But our economies are moving at a different pace. Our inflation are fed by different components, and as a result of that, our analysis of the roots and the consequences of inflation have to be different. Let me just give you an example, and I'll just speak for Europe, and then I'll let my colleague, Mr. Powell, speak for his economy. Given that we have both the objective of price stability, which is the driving compass for us, our inflation numbers are very high. You're right. 7.4% in March, and we will be,
With any inflation numbers they give you guys, at least triple that number. And then you'll get closer to the real number.
more than double above the target at the end of the year. But when you try to understand what comprises that very high number, you see that almost 50% of it is energy prices. So that's a supply shock that we are taking. If I look at my core inflation, so if you take out food, you take out energy, I'm down to 3%. It is north of my target, which is 2, but it is more manageable, if I may. It's actually 2.9% because it's just been revised this morning. So our inflation is fueled by a supply shock, which calls for a particular type of response, which brings together fiscal policies and monetary policy. And obviously, we cannot operate at the same pace, with the same sequence, using the same instrument necessarily when it's that kind of inflation that we are dealing with. So it is much broader based than it was. It is much higher than our target, but it is supply driven, number one, and it needs to be addressed in a sequential, flexible, gradual way, which is what we have begun doing. We have started the journey back in December. We have reinforced that position in March, and we will have a new set of fresh data in June, which is when we have our next Monetary Policy Governing Council, at which point we will have to determine when we stop net asset purchases in the course of the third quarter, of course, but when in the third quarter? Is it going to be early? Is it going to be later? To be determined by the data that we receive. And that will then lead us to assess whether or not an interest hike is needed, and at what point in time after the net asset purchases have concluded.
So you don't have that in your mind, that you'll be raising interest rates, say, in July?
I have all the steps, all the tools, and all the sequences in my mind all the time. And what I look at all the time too is the various indicators that are provided by the...
Notice how she deflected the question, guys. She did not answer the question directly.
Forecasters, by market analysts, by markets, by consumers.
Which is an indication of, yes, they will be raising interest rates very rapidly.
By the labor market, which informs us, because clearly the second round inflation is one component that for us is critically important in order to determine whether inflation expectations are well re-anchored at around 2% or whether they are...
Look at Powell, guys. Just for the purpose of this video, I'm just going to rewind it just a few seconds. Look at his body. Look at his body language. He knows something huge is coming.
For us is critically important.
Notice that he just suddenly, he was thinking about something, which is about what is coming. Then suddenly his mind got back to, I guess, to the meeting. Then he quickly looked to his right.
In order to determine whether inflation expectations are well re-anchored at around 2%.
Notice how he's looking around. This is how you can tell. The body tells you so much, guys.
Or whether they are at risk of de-anchoring. So that's what I have on my mind all the time. But
they're moving up a little bit, aren't they?
To be fixated on a day, a time in the day, doesn't make any sense to me, because once we say that we are data dependent, for goodness sake, let's wait until we have the data and then we move on to decide. And we've agreed on a sequence. We have to follow that sequence in the journey that we have embarked upon.
What about inflation in the US? Some are wondering if it's peaked. Do you think so?
So let me say one of the great benefits of the IMF.
There you go again, deflecting the questions. Whenever they deflect that question, guys, be careful, because they don't want to answer that question, or they are fiddling around the question. So obviously the inflation has not peaked and is going to continue to rise. So that is why he's deflecting the question. He doesn't want attention to inflation, to hyperinflation.
IMF meetings is the chance to talk and collaborate. Christine and me and all of our colleagues talk about these things, and we find a couple of things. First is that inflation is really a global problem. It's quite everywhere, and it's high in most places. But there are differences. There are certainly differences. So in the United States, we have very strong growth, and we have higher inflation. We have higher core inflation than Europe does, for example.
And the fact that he just said that, guys, if people were vigilant, they would have been buying and loading up on their crypto positions. But a lot of people, I guess, they have no idea what is coming until, like I said, most people are reactive. They are not proactive. So they wait until the last minute, until it's too late to make a decision or to act on something. So don't let that be you, guys. Go ahead and load up on your position, on your crypto positions, because that is the savior.
We also came into this. Europe has struggled more than we have with low inflation, well below target, had a much lower policy rate. So we have a different level of underlying inflation. So there are just differences. And of course, we all serve domestic mandates. So in the case of the United States, We have had an expectation that inflation would peak around this time and would come down over the course of the rest of the year to an extent, and then come down further in 2023. These expectations have been disappointed in the past, and so now we're really in wanting to see actual progress. It may be that the actual peak was in March, but we don't know that, and so we're not going to count on it. And we're also no longer going to count on help from supply side healing. We're gonna if we get that, that'll be great, and I think that would be enormously helpful in having a soft landing. But we're really going to be raising rates and getting expeditiously to levels that are more neutral, and then that are actually tightening policy, if that turns out to be appropriate once we get there.
But isn't it going to be hard to control inflation through tightening when a lot of it is coming from the fact that Russia and Ukraine are major exporters of so many commodities that we need? We don't know how long this war is going to go on. We don't know how long China is going to be seeing these rolling shutdowns and therefore more supply crunch. Isn't it going to be harder than normal to get a handle on inflation through your policies?
Yeah, we of course can't affect supply side issues. We really can't affect much food and energy prices either in the near term. So it comes down to what we can do is our tools work on demand. But we have a job to do on demand, and I'll point to the labor market. There are substantially more job openings than there are people who are unemployed. And if you take total employed people plus job openings, that's demand for labor. If you look at the size of the labor force, there are more than 5 million more demand than there is supply. So we've got a demand-supply imbalance in the labor market and elsewhere in the economy. It's clear, and that comes from a number of things, including fiscal policy, including what we did at the height of the crisis. So there is a demand job to do, but you're right, we can't fix supply-side problems.
Do you need the stock market to be lower to impact demand?
I never would point to one particular price or asset or class of assets, but generally the way our policy works is we control one overnight rate, plus the balance sheet also has some effects. And that affects broader financial conditions, and that includes asset prices, include credit availability, risk spreads, all kinds of financial conditions. And the financial conditions, in the end, those are what affect the real economy. So we monitor financial conditions. So there really are two steps there. And one of the many, there are many different combinations that are possible of financial conditions, and we have seen some tightening from our rate increases, and that's to be expected.
So some people have this idea, President Lagarde, that you guys need to shock the markets to really to start to see more of an impact when it comes to putting pressure on demand and on inflation. Is that something you ascribe to?
I think what we need to do is communicate with as much clarity as possible as to what we analyze, what we see, what timing we have in mind, and what journey we're embarking on. And for us, it's not so much an issue of tightening when we look at the real rate. It's an issue of normalizing monetary policy, and
Guys, like I said before, words are important, keywords are important. Notice she said they are embarking on a journey. When it comes to a journey, most journeys are difficult. That's the reason why it's called a journey, because you are going to be confronted with many obstacles. So this is what she is referring to when it comes to the economy. So she's just letting you know there's going to be a lot of difficult times ahead.
And
the subconscious told you that, so she's not going to outright tell you that.
Using the tools that we have, I think the added dimension that Europe has is that it's a monetary union with the complexity of a monetary union, where you have 19 different fiscal policies, 19 different treasuries, and that makes my job just a little bit more complicated.
But you also have the euro, which, because you're moving at a slower pace, is weakening pretty substantially. Is it getting too weak and making the inflation problem worse?
No, we don't target any particular exchange rate. We pay attention to it. It clearly has an impact on inflation, but we don't target any exchange rate.
Minister Miliani, want to move it to the fiscal side of things. We've done monetary policy. As you look at the appropriate policies right now, it's a little tricky because normally the IMF would advocate for fiscal stimulus in a weakening global economy. Can't do that now when we have such a strong inflationary environment. So how are you thinking of this?
It is a climate shock, a pandemic, a war that is dramatically impacting a country. And what is the role of international institutions to be a corrective force in that regard? During our meetings this time, this issue of what is the role of the IMF in a world of multiple shocks, some of which are because of the evil of men.
Notice what she just said, guys. She couldn't get the word out. Whenever you try, like I said, whenever you, I'm not saying I'm not saying she's an evil person, but her subconscious is telling me that she's not a good person as well. Because, for example, if try to say something about yourself, try to say something about yourself that is not true. Or, for example, let's do this. If you are a guy listening to this, try to say, I am not a man. That word will be very difficult to come out because you know it's true, your subconscious know it's true, but you are trying to tell something that is not true. So it's going to be very difficult to say, to come out. So I'm going to replay this so you see how she tries to let the word out, but it's very difficult to come out. That means she's trying to tell something that is who she is, but it won't come out.
The IMF in a world of multiple shocks, some of which are because of the evil of man, some of which are because of Mother Nature, but they are devastating countries to a point in which they simply cannot pull themselves out. This is one issue, and Mia is right, we have to work on identifying instruments. We are looking into are debt for climate swaps a possibility? We haven't advanced it enough. It is still in the universe of retail. In other words, I would do it for you, for your project. We want to move it to performance indicators and the world of wholesale. In other words, we do programs with a country like Barbados. The second issue, though, is that not all problems are exogenous. We still have plenty of problems that come because of poor judgment, bad governance, corruption. When Christine was the managing director here in 2018, early 2019, in these good days that we almost forgot existed, she would say, when the sun is shining, fix the roof. Mm-hmm. What we are now discovering is that many countries did not fix the roof when.
Look at Powell's body language again, guys. Look how it gives you that feeling of sadness, of someone who knows something horrible is about to happen. His head is hanging, his mind is somewhere else. That tells you it's time for you guys to prepare yourself. Like I said, go ahead and stock up on some food. That's going to last you months ahead, at least 6 months, because what's coming is going to be 50% food shortage on a global scale. And once people start to see that, then it's going to be a panic everywhere. So don't let yourself get caught in this predicament. So be proactive, don't be reactive. This will literally save your life. So go ahead and stock up on some food, water, and put some money. Like I said, I wouldn't recommend keeping your money in the banks because it will vanish. The bank will take well, the bank will steal your money. So put that money into crypto where it is more safe. And once you've accumulated enough crypto, I'm gonna make update videos, guys, and like I said, when to take profits. And at the end of the bull run, this is where you're gonna take some of that crypto profit and you're going to buy gold and silver. And this is how you're going to generate wealth and generational wealth, guys, through crypto. After crypto, then you protect your wealth by investing in silver and gold.
The sun is shining. Now it is pouring. Well, maybe now we get to fixing.
Like I said, guys, power body language tells it all. So that's a confirmation for me that everything I've said in prior years is coming into manifestation, hyperinflation, and all sorts of things. So prepare yourself, guys, and don't forget to like, subscribe if you are new to the channel, and join VisionaryDeFi Telegram and get updates. I'll see you in the next one. Peace.